Triangle corrections. The triangle correction is the final group of simple corrective waves. Up to now, we have only learned about the corrections that have 3 wave structures. With triangles, we need to add 2 more waves, so every triangle we have a 5-wave structure. We are also going to use the letters A, B, C, D, and E to label these type of movements on the charts. Triangles are patterns that appear usually in the middle and at the ending stages of the trend, and they can only be seen in waves 4 in a motive phase and waves B and X in a corrective phase. There are 4 different types of triangles we need to learn: contracting, barrier, running, and expanding triangles. Contracting triangles are the simplest 5-wave triangle, where each of the triangle legs is smaller than the previous one. So, for the rules, we are going to use this. Wave B must be smaller than wave A, wave C must be smaller than wave B, wave D must be smaller than wave C, and wave E must be smaller than wave D. Barrier triangle is similar to a contracting triangle pattern. Wave B and wave D need to end at the similar levels. When you draw a trend line, it's going to show a good support or resistance area. Again, we have the similar rules. Wave B must be smaller than wave A, wave C must be smaller than wave B, wave D must be smaller than wave C, wave E must be smaller than wave D. Running triangles are the same as contracting triangles with one small difference. Wave B ends slightly above the starting point of wave A. Usually that's a result of a short-term spikes in the market developed as a result of a fundamental event. But everything else remained the same, so wave B must end above the start of wave A, but wave C must be smaller than wave B, wave D must be smaller than wave C, and wave E must be smaller than wave D. The final group is expanding triangle. Expanding triangles are 5-wave triangles where each leg of the triangle is larger than the previous one, so you just think of this triangle as the mirror of a contracting triangle. Rules are again going to be similar, just in this case everything will be bigger. Wave B must be larger than wave A, wave C must be larger than wave B, wave D must be larger than wave C, and wave E must be larger than wave D. Here is the chart of the EuroCAD, where we can see a nice triangle pattern developing in the middle of the trend. But how to be sure that you are correct? You need to see a 5-wave moves. And you know that wave B should be the smaller than the wave A, in this case that's true. Wave C needs to be smaller than wave B, wave D needs to be smaller than wave C, and wave E needs to be smaller than the wave D. So this triangle is a part of a contracting triangle, because each leg is smaller than the previous one. How to trade a triangle would be simple. We would just wait a potential breakout of the trend line that you can throw from the ending points of the wave B through the ending point of the wave D. A breakout should move the market in a direction of the larger trend. Here is another example. EuroCAD. We can see a strong push higher in the market, followed by a pullback in the middle. And if you start looking in the movements from the top, you can see that 5-wave moves, but you cannot see a clear 3-wave moves like a zigzag, and this all look like a 1 wave in reality over here, because this is a smaller time frame. But you have a 5 waves in total. So let's see. Wave B is smaller than the wave A, wave C is smaller than wave B, wave D is smaller than a wave C, and the wave E is smaller than wave D. Breakout moved us higher. So after a breakout, you can consider a triangle pattern a complete. Swiss franc yen chart show a bearish example of the triangle pattern. Now over here, we can see a push higher in the wave A, pullback in the wave B, again C, D, and E, and again, this look like a contracting triangle like the previous 2 examples, because each leg is smaller than the previous one. But let's check. Wave B is smaller than the wave A, wave C is smaller from the wave B, wave D is smaller than the wave C, wave E is smaller than the wave D. Breakout moved us lower. At least we had a new low in the market after the breakout. Here is a chart of the euro-pound where we can see a potential running triangle. But why am I saying a running triangle? Because if we look at the wave B, we can see that the wave B breaks above the starting point of the wave A, and after it we are pushing lower. But the wave C is smaller than the wave B, wave D is smaller than the wave C, and the wave E is smaller than the wave D. And again, a breakout lead to the nice push higher.